And that right there is free game. So a common question people tend to ask is, how do I fund or finance my deal? So today, I'm gonna answer that question for you and make it very simple. There's 3 ways of doing that. The first one is cash. The second one is hard money lending. And the third one is conventional financing. So I'm gonna break down those 3 for you. The first one, cash. Obviously, cash is king. So if you have cash, which most people when they're starting out are not in the position to be able to buy a house in cash, but if you're one of those people that are, that's perfect for you because you'll always have the upper hand. You'll have the upper hand in regards to getting the best price because most sellers, especially if it's a seller who's in a financial situation and they need the money, or somebody who's just trying to get rid of the house, they love cash. So they're willing to take a lower price because they know they're getting cash. It's going to be quick because you don't have to wait on lender financing and appraisals and certain inspections. You know, they can bypass all of that and just close on it extremely quick. And it's pretty much hassle-free for the seller and the buyer. The second one is hard money lending. Now, hard money lending is great because it's almost like cash in regards to it not being that much of a hassle. For me, I use hard money lending a lot on certain deals, and I can close almost as fast as somebody who's using cash. So I literally can close on a house in 7 to 10 days if I really want to. And if it's a good deal, I'll move on it that fast. The difference with hard money lending is that there will be certain things you have to do. So yeah, you might have to get an appraisal done. The lender itself may want to do their own personal inspection. Sometimes they do something what's called a feasibility inspection. So if it's a house that you're buying to renovate, they send out a feasibility inspector. They look at your budget of what you're saying is going to cost to fix this house, and they have one of their people go out, examine your budget, go through everything that needs to be done, and make sure that those numbers are doable. So that's one thing you'll have to deal with hard money lending. Now, certain hard money lenders may not do that, and obviously, the better your relationship with them is, and the more you do business with them, the less likely you may have to go through that. But every lender has their own rules, so you will have to speak to that lender and find out, what their rules are. The third one is conventional financing. Now, most people that flip houses will tell you this is not the route to go, and I probably agree with them, but at the same time, a lot of those people that give you information about flipping houses are at a point where they have become disconnected with the people that are watching them. So I'm not one of those people, so I'm going to give you a scenario of why conventional financing can work for you. But first, I'm going to give you some information about conventional financing. So with conventional financing, the difference between that and hard money lending is it's obviously a lot more time consuming, and there's a lot more hurdles to jump over. When a bank, let's say, one of the main banks, I'm not even going to say a name, one of the main banks, you're applying for a loan to get a house. Typically, they want to go over your personal finances, see the money you make, see how much you're bringing in, your credit score, a lot of personal information about you. And obviously, to close in a house could take anywhere from 30 to 60 days. What else do main banks? Main banks, they definitely will do inspections, and they just have a lot more things that they need to be crossed off in order to approve you for the loan on that house. The difference is conventional financing can take you 30 to 60 days to close on a house, and hard money lenders can take, let's say, 7 to 14 days to close on a house. Depending on that deal, you may have leverage if you can close faster. If it's a deal where it doesn't matter, then it is what it is. The benefits of a conventional loan is that the conventional lender will give you a lower interest rate, and that's spread out across, a 30-year loan, opposed to a hard money lender, which their term is usually 6 months to 12 months, but you're getting a higher interest rate. And with that higher interest rate, obviously it'll make your monthly payment a lot higher. But, it all depends on the deal, as I said before. Now, one scenario where conventional financing can be beneficial is if you're a person that's just getting your foot in the door. Some hard money lenders want you to have experience in flipping houses. With a conventional loan, you're not going to tell them that you're buying it to flip it. You're literally using this loan to get your foot in the door. So you buy this house, and let's say you look for a house that needs renovation. This is your first time trying to get your foot in the door, buy a house. You see one in your neighborhood, which you know well, or whatever neighborhood, you think it's a good deal. You buy that house, you renovate it, and you can also get renovation loans incorporated in that. If you did a FHA loan, you could do a 203K, and if you did a conventional loan, you can do something called the home style loan. But I'll do a separate video breaking down those for you. But that conventional loan, you get that loan, you renovate that house, you use that house as your primary residence, and you get in it, you renovate it, you put that house back on the market, and now you got your first flip going. Now the trick to that, and if it's your first one and you have a main job, you may want to hold that house for 2 years. It's okay, I know that's a long time, but let's say if this is a big enough flip where I did one of those and I flipped the house for over $200,000 on my first house. Now, in that scenario, I kept the house for 2 years because when you keep it for 2 years, you don't have to pay capital gains tax on that house, on the sale or the profit from that sale. So depending on, how much money you're making from it, you might want to consider that option. But overall, those are the 3 ways to finance your deal. Like I said, it's cash, it's hard money lending, and conventional. Me personally, I prefer hard money, even against cash, because cash, you're dumping a whole lot of money in one property. And for me, I personally like hard money lending because you could take that same amount of money that you were gonna spend in cash on a house and spread that amount of money across 5 to 6, 7 different houses, depending on how much money it is. So me, I'd rather have those 5 to 6 multiple projects going at one time than to dump all my money into one house. But again, at the end of the day, it all depends on your personal financial situation and what option works best for you. Don't worry about what everybody else says. Don't take advice from people who don't know what they're talking about, because a lot of people make that mistake. At the end of the day, take good advice, and when you get that good advice, apply it to whatever option works best for you. And that right there is free game. Subscribe to the channel. Hit me on social media if you have any questions. I'll do more videos. I will do another one in regards to breaking down the lending, the renovation lending, as I just talked about a few minutes ago. And I'm going to do another video on how to find your deal. So subscribe to the channel, like the videos, hit that bell on the top so that you can be notified every time I'm dropping a new one. And on that note, I'm out.